Hey, I'm Charting Man Dan, trader and technical analyst with the Chart Guys. In this video, we're going to check in on the markets. There's been a ton of whiplash this week, with each side definitively winning a day and then trading off. Yesterday, big bull day, catching the bears by surprise. Today, big bear day, catching a lot of bulls by surprise. We'll talk about some of the similarities with these trending days, and we'll also talk about now two very critical levels that we can make definitive statements about for going forward into the rest of this year. Stay tuned, and I'll tell you what those statements are.
So if you're feeling jerked around this week, it makes sense because the price has been jerking around and we pretty much traded off each day as far as sentiment. And so we started with ending last week with the gap down open, the exhaustion moved down leading to the bounce. We got a day of bounce follow through to start Monday, expected. Tuesday looked like a daily lower high was being set. A lot of bears had a lot of confidence that the daily lower high was being set to continue the daily downtrend. And then yesterday, Wednesday, the bulls showed up and said not so fast. And the bulls surprised a lot of bears yesterday. And then today, the bears surprised a lot of bulls. We knew we were still in a daily downtrend. And one thing that this week is really solidifying is the power of gaps and just having a rule. Again, this is not the case. I don't want to oversimplify things, but a rule of looking short on gap ups and looking long on gap downs. And it obviously doesn't work out on every time. And if there's news involved, it can be different and less, of a helpful mindset. But I mean, you just look at this move in SPY recently, and we got the gap down for buying. I mean, it's been happening for a while, but gap up for selling at the top. And then we had a gap down for buying for that little daily bounce. And then we had the gap down for buying back here. And we had the gap up for selling on Tuesday. And then another gap up for selling today. So essentially, if you went into the morning, and did we gap up on Monday? Highs 437.57. We didn't gap up by 2 pennies. So essentially, if you bought the last 3 gaps that we've had, if you play in the opposite direction of the gaps, you're trading really well. It was all bulls on Friday, all bears on Tuesday, and all bears today. So just keep that in mind as a general rule of thumb to try and help with a directional lean on the day. Now, we couldn't say gap up open, we're going to dump all day and dump in a huge way, but we could say gap up open, daily lower highs are still the most likely result of this bounce. And that was the key for me. Yes, bulls showed up yesterday surprisingly. Yes, NVDA bullish earnings reaction leading to gap ups. But we're going to remind ourselves that a daily lower high is the most likely result of these bounces. And so if you are gapping up in a daily downtrend, that is not the time to be looking long. And so we saw today the comical part of today is a ton of volatility, and NVDA ended 0.1% from the pre-earnings close, which is just perfectly pinned to where we were yesterday. But a lot of profit taking, and the significant shift in probabilities to favor the bulls yesterday, bigger picture, just shifted back to the bears in a big way. And we have Jackson Hole tomorrow, where Powell is going to be speaking about things, and market definitely anticipating hawkish tone still to what Powell is going to be saying. But one thing that I could say about these two definitive statements with where we stand right now. So let's go with the NASDAQ, because the NASDAQ bounce was bigger. So just 2 levels, if this low holds, which we now have a good bit less confidence in than yesterday, and into tomorrow or into next week, it's all about, can the bulls confirm the daily uptrend, which they haven't done yet. And the retracement size of this drop makes it a lot less probable, because we just gave back 70% of this entire bounce in one day on some pretty good bear volume. So this is why stop losses are so key, because this week has definitely jerked around my probabilities and sentiments a good bit. So anyways, if the low holds, it's a monthly bull flag. Simple statement. If that level's not going to break, we're not going to go down very much farther. We're not going to go down further at all. And that's going to be a monthly bull flag. If this resistance does not break, it's a weekly downtrend shaping up. And I've been talking about this potential weekly downtrend for a while now, and that is a quick little weekly lower high. And if we drop down and break the low of last week, that technically is a weekly downtrend confirming into further monthly consolidation. Now, the last thing that I would want to see would be for both levels to break with neither having follow through. But again, it's this head and shoulders type of pattern here that is on the weekly time frame. It wasn't much of a weekly bounce, but we broke the high of last week, and now we're looking right back at the low of last week. And so bulls need to be a good bit more cautious right now into next week. So SPY, daily bearish engulfing candle on the gap up open. Again, the only way the bulls can save this here is holding 433, which we're about 1% above, and turning around and breaking 445.22 to confirm the daily uptrend. And bearish engulfing candle marked the top. This is another bearish engulfing candle. Is this marking? I mean, it's definitely marking the top of this bounce, but are we about to roll over into fresh lows? And if we do, and we break the low of last week, probabilities increase a good bit more for longer term lower highs and tightening ranges into 2024. So no shortage of volatility. NASDAQ, we already went over, QQQ. So key support coming into play is down at 354.71. A little bit more support, a little bit more cushion to work with, 2%. But again, that's a big bearish engulfing candle. And so, semiconductors as well. Huge sell-off candle. Is this the weekly lower high forming on the semiconductors? It sure looks like it might be. And if we then drop down and break 143.35, we confirm the weekly downtrend into further monthly consolidation. And the one thing I've been talking about is the other major sectors. And we started the morning with the NASDAQ selling off, not surprising, with the NVDA profit taking and all of that. And on the morning, our other major sectors were showing us some strength, where XLV broke the high of yesterday, granted only by 9 pennies, but XLF had a real big morning bounce. And then once we gave that all back, that was then all sectors showing weakness together. So we started with some rotation on the morning, which would have been just fine for the S&P 500 if that was less of a big sell-off candle in the NASDAQ. But where we ended here and now, all sectors are weak. XLF, or I should say, XLV confirmed the daily bear flag and is closing in on confirming a weekly downtrend. And XLF is still a potential daily bear flag as well, with the smackdown from the daily EMA 12. Tesla opened right at resistance. So, I had some hopes and dreams where my swing position just might be a monthly higher low forming. But after today, that has a much lower probability. So I'm risk-free. I've got a stop loss under the low, but I was looking to potentially add a position, but with today's action, going to put a halt on that and essentially take a step back and be a little bit more cautious and patient and see if the bulls are able to form a daily high or low. Still possible. It's still possible we shape up a daily uptrend here, but again, just the bipolar nature of the market this week is difficult. And a lot of it has to do with NVIDIA's, the size of its market cap, the size of its weight in the S&P 500 and the NASDAQ, and the volatility that it still has is unlike anything I've ever seen in 13 years of trading, where you've got big market cap names that can be volatile, but not to this extent. And I like to say this isn't your grandpappy stock market, and that's on full display, where clearly the bots and the algos and the automated trading systems and the 0-day expiration options, all of this is culminating in increased volatility in markets. And NVIDIA is the perfect example of that. So, if you just, some of the statistics where on a day like today, if you look at the amount of market cap it dropped from the open to the close, you're talking like a massive company worth of market cap, like something like Ford, entire market cap from the open to the close today. And I'm just making that up. I don't know if that's actually the case, but it's close, I assume. And so again, it's just, it's wild. So what does that mean for NVIDIA? Well, it's an uneventful day overall in terms of where we were yesterday. But it's a bull break with zero follow through. Key support for me remains 400. That's the most important level. But we did confirm an hourly downtrend into the end of the day. So new resistance now, 489.50. We got some support at 452, 453 to be watching. But just waiting for the dust to settle or something here because it is a wild mover. Got to use stops in this kind of market. So XLV, as you mentioned, it's all about 132. See if we confirm that weekly downtrend. Again, if we confirm the weekly downtrend, it's then a 2-month tightening range, a year in the making, almost a year and a half in the making, which we will then look for a break of either right at the end of this year or first thing next year, which will have significant implications because if this 2-month time frame loses EMA 12 for the first time in over a decade, that's definitely going to be a big tally in the bear column overall. And again, the financial sector trying to shape up the monthly tightening range. Bears need a little bit more follow through. And if that shapes up, then early or right at the end of this year or first thing next year, we're going to get a break of this long term. We can look at the 2-month time frame as well. It's been forming almost 2 years. So I like that fact because these tightening long-term ranges, when they break, generally give us a good bit of follow-through for the longer term. And CCJ monthly equilibrium that we were watching forever is just a good example of that, where we've got a long, drawn-out tightening range, a year in the making, and it breaks bull, and it's following through for multiple candles, which means multiple months. So if we're watching it monthly and 2-month equilibriums playing out over a year or two, when they break, we're going to look for months of follow-through. So part of me as a trader hopes that we get that because that's clarity. Tightening ranges with clear breaks, give me it. IWM daily bear flag still on the table. Every new high of the day lacking follow through. And again, same thing here. If the financial sector pulls back here, same thing. And we'll be looking at key support 166.99. But again, another long term. I mean, how long has this been forming? A year and a half, pretty much. So that's going to be very key if the bears follow through a bit more, which again, after today, that is definitely a high possibility, probability, whatever you want to call it. ARKK, potential daily bear flag, rejecting from EMA 12, bearish engulfing candle. Again, just gap down for buying, gap up for selling, gap up for selling. I'll talk about trades that I took today. Only took 2. I've got family in town, so I'm easing off a bit. But I'll talk about those in just a moment. Riot, daily bear flag confirming. MARA as well. So very brief bounce, cool off some RSI levels, and right back to bear control. And the Bitcoin bounce is a potential daily bear flag being dragged down a bit today with the broader market weakness. The dollar, I'm so sick of this 12-hour time frame. Just break. But here we are. The bears did not confirm. We barely confirmed an hourly downtrend, but never confirmed the 4-hour downtrend. Just right back up to a break. Probably not going to get any follow through. Probably going to pull back a bit from here. But again, it's just this. I'm just going to keep these lines up, and the bulls have full control as long as we keep holding. And that is definitely adding some downward pressure on stocks and metals and crypto. 10 years trying to put in a daily. Well, we lost the daily uptrend. So 10-year, a good bit weaker than the dollar in the short term. Is it shaping up weekly consolidation? Potentially, but the dollar is not yet. Oil, bulls would love to see a daily bounce begin here. It's an inside bar today. But if we get the daily bounce going, I take that back. We broke by 3 pennies, but that's insignificant. If we get the daily bounce going, we call it a downtrend confirming with no follow through, which keeps the weekly healthy. So we're going to keep an eye on the weekly EMA 12 that is trying to hold. But again, whenever I look at something and say it's a break with no follow through, I need candles in the opposite direction. So if I'm looking for a rising wedge, I need a break into multiple candles of consolidation. Then I call it no follow through. So I can't call this no follow through yet because if we have a red day tomorrow, it's just a little sideways pause before continuation down. But if we're green tomorrow and get the daily bounce going for a candle or two, then I call it a bear break with no follow through. And natural gas, right down to our megaphone support. We technically broke the low with no follow through, which is what megaphones love to do. So again, we started looking at this megaphone. I forget when. I said be cautious of the megaphone, probably somewhere around here, but certainly once this daily bear flag confirmed. That's when we set our sights on that 245 and that downtrend support. And again, this is just, I really don't like megaphones. I'm getting better at identifying them. But that's part of the reason why I don't like trading natural gas is as far as, clean technicals, it's just ugly. And by technicals, I mean price levels and price trends, which are my bread and butter, of course. All right, so trades I took today. So my mindset, again, yesterday on QQQ, do not short if 2-minute EMA 12 is support. And we held it till 11:30 a.m. And then I woke up today, and I missed the open. I was on a call. But, I pull up the 2-minute EMA 12, and I say, oh my goodness, it's doing the exact opposite. And it held the entire morning into midday. And so my mindset was, I am not looking long if 2-minute EMA 12 is resistance. And look at what happened when we got over it. We got over it, and that was the only real bounce of the day. And we gave it back. But again, it's a good guide of just, I posted in the chat room, I wanted to play 8 bounces. I wanted to look long 8 different times. I'm just making that up, but, I love playing bounces. So, all right, we're getting extreme. And so to combat that and to essentially put oven mitts on my hands so I can't trade, I use that guide and I make a simple statement. I'm not going to look long if 2-minute EMA 12 is resistance. And that saved me 2 hours of further downside. But I did look long on Tesla because it had relative strength. And that was just shown through right here. We hit the low of the day at 10:30, bounce, 5-minute higher low, lower high. And so I'm looking right here and saying, all right, we just held support again, and it's approaching noon. And again, the NASDAQ, how many times did we hit a new low of the day after 10:30 a.m.? I mean, here's 10:30 a.m. when Tesla hit the low of the day. And so Tesla is showing us for the next hour and a half that it is completely disregarding the NASDAQ and showing us relative strength. So I made a long playing off of this equilibrium. So the mindset is, I know how to play an equilibrium. I know the key level that needs to hold. And I'm just hoping that the NASDAQ puts in a bottom to help this relative strength break this pattern bullish. So I made an entry in the 230s. My stop goes under 229.26. I could have used 229.70, but with that other level just right nearby, the last thing I want to happen is drop down to 229.47 and then bounce, essentially breaking one level but holding the other level right behind it. So in that instance, I'll always default to the level that's a little bit further away to just give me a little bit more wiggle room, and maybe I adjust my position size for that. But entered in the long in the 230s and exited partial, I forget exactly where, after the bull break, and then used the 5-minute stair step. And I said, I will exit the second half of this position when the pattern of a higher low every 5-minute candle breaks bearish. And my reason for using that is I know an hourly lower high is the most likely result. I know it's counter trend to the broader market today. And so I stopped out the second half of that position when 233.83 broke. And that ended up being a really nice signal for the bears as well, because that was the high into the end of the day. And you can see the 5-minute RSI got real close to overbought there. Didn't quite get there, but got up to about 68 instead of 70. And the next trade that I took was recognizing, of course, the bears have absolute control. And so I was looking short. And once I saw the size of this pullback, or pretty much once this pullback started, I said, I'm looking bearish for a 2-minute or a 5-minute lower high, and I'm going to put my stop over the high of the bounce. And we got a 2-minute bounce that was too quick for me. I didn't act on it because it was one candle right here. And I said, all right, 5-minute. Next 5-minute bounce, I'm shorting and I'm putting my stop over the high so that if the trend day for the bears continues, I get more profit. And so on this bounce, and again, I posted both of these in the chat room, but just didn't clip the copy. But shorted, stop over 365.51, and then just let it play out. And I exited half around here. When we broke the low of the day, it didn't see much follow through. There was a support zone here on the futures chart from the last couple of days. And then I exited the rest right into the close. Reason being, again, family in town. Jackson Hole tomorrow. More volatility is coming tomorrow. And just wanting to be more on the flat side. And so I'm still in my hedges in my IRA. And my mindset was, if we get over daily EMA 12 resistance, I'm going to look to cover those or exit those hedges. And doesn't just, for me, that means, okay, we closed over it. And so my mindset was, all right, next daily consolidation, knowing we have to confirm a daily uptrend, next daily consolidation, I'm exiting these hedges. But now because today was such an exclamation point for the bears, all right, I'm going to hold on to a bit longer and see, how the next 2 days or so goes. So essentially my IRA is flat, where it's not really moving much the last few days with all this volatility because I'm fairly evenly balanced with the short positions covering my longs. And I just use the leveraged ETFs, SQQQ, SPXS. But it's what I like about doing that is it buys me time. Like I don't need to act. I'm flat. No, my account's not changing. Obviously, I don't want to miss out on gains. If we had V-shaped all-time highs, I'd be bummed. But in scenarios like this, I have time. My account's not moving much as far as my IRA, and so I can wait for more information. All right. Hope you fared well. Again, it's a tough week out there. In bigger picture, a lot. We knew the daily lower highs. We knew we're in daily downtrends on a lot of these names. So that aspect is not surprising. But the magnitude and the speed of these moves and the just complete, again, bipolar from one day to the next, it's a tricky week. And again, fundamentals definitely have to do with that. The NVDA earnings, the importance that the market and that social media is placing on NVIDIA is dangerous with regards to sentiment. I mean, you see NVIDIA drop 5% on the open on earnings, and it was a fire sale of everything. Sell everything. So that's something to be keeping an eye on. I think, NVIDIA has X% of weight in the S&P 500 and the NASDAQ, but it now has a much higher percent of weight in the perception and the minds of retail. That's a big takeaway from this video. Nice little gem to end on. No end of the day clip here. Do good things.